Supply and demand, one of the most important concepts in trading. I'm going to show you how to draw zones correctly, what you need to look for, how to enter, how to exit, and of course, I'm going to give you the secret tips on how to improve the performance of my supply and demand zones. Absolutely for free. So what is supply and what is demand? In the simplest terms, supply is an area where price had aggressive selling, and demand is an area where price had aggressive buying. So supply involves going down, demand involves going up. But one of the very key factors of supply and demand is that the move has to be aggressive. For example, here, this move would not be considered an area of demand. Sure, you have decently sized green candles right here, but this wouldn't be considered enough to be an area of demand. What we're looking for is aggressive buying. For example, here you can see from this point on, there was extreme buying. As you can see from this price action right here, this would be considered a successful demand zone. So quick recap, you'd need to have aggressive buying or selling in order for it to be a good zone. If you only have a couple of candles with big wicks moving up or down, it's not considered a supply and demand zone. Let's move on to how to draw these zones correctly. Then I'll give you a secret tip to make them more accurate. There are so many ways to draw the ideal supply and demand zones. Everybody has their own way of doing it. This is just how I personally do it. Here we have our chart, and as you can see, we completed step 1 and found some aggressive buying. How I like to draw my demand zones is to find the opposite colored candle before the aggressive move. So since this is a large aggressive upwards move, we're going to draw a demand zone right here. What we want to do is find the red candle that preceded this aggressive buying, which would be this candle right here. Then you want to draw your area from the low to the high of the candle. This would now be your demand zone. Here's an example for supply. Here we have an aggressive selling, so we find the green candle right before the big move and draw an area from the low to the high of the candle. This is our supply zone. Pretty simple. So that's the easy part. The easy part is drawing the areas, but something very important, not all of these areas that we draw are going to be good areas. Actually, most of them are going to be invalid areas. This is how you differentiate a valid area from an invalid one. But before that, let me tell you about the simple formula. If you're like most traders, you've probably spent countless hours searching for that one profitable strategy. You watch tons of YouTube strategy videos, jump from strategy to strategy, and yet you're just unable to find that winning indicator or strategy. Well, if this sounds like you and you're wondering why this sounds familiar, it's because I used to be in the exact same place as you. And I get how horrible this feels. You waste tons of money and worst of all, tons of time. That's why I developed the simple formula. This course explains a powerful trend-following day trading strategy for trading futures, stocks, commodities, and forex. The simple formula is easy to understand and to trade. This approach doesn't require complex trading software. Basic charting tools like TradingView is all you need. Thousands of traders have used this strategy already. Don't miss out. Get instant access now for a limited time. Okay, back to the video. So this is how to differentiate a valid zone from an invalid zone. A valid zone will cause what we call a break of structure or a BOS. To understand this better, we need to first look at how the market moves. When the market is trending, the price moves in steps, sort of like a ladder. In an uptrend, we call these reversal points higher highs and higher lows. Similarly, in a downtrend, we call them lower highs and lower lows. For a supply or demand zone to be valid, the price needs to aggressively break one of these structures. So here we have an aggressive downwards move. We follow the steps I told you before and mark up our supply zone, which again is simply the candle before the aggressive selling. Next, we need price to break this structure right here, which it does, which means this zone is now valid and we can trade from it. Conversely, in this example, we again have an aggressive downwards move, but this time it does not break the structure, so this zone is not valid, and we would not trade off of it. In other words, it needs to have both an aggressive move and a break of structure to be a valid zone. So now that we know the criteria of a valid supply and demand zone, let's move on to how we can actually enter and exit based on that criteria. Then we'll go over that secret tip to improve your zones to make them so much better. Here we have an aggressive move upwards, so that's step 1 complete. This big movement causes a break of structure. That's step 2 complete. So we draw our zone from the candle that initiated this big move. Now, this is how you would do your entry and exit. You're going to enter as soon as the price comes back down to this zone. You will set your stop loss right below this zone, and you're going to set your take profit right at the top of the upwards move. So you'd set your take profit right here. As you can see, we have a great risk to reward ratio, and the trade instantly hits our valid demand zone and skyrockets to our take profit for an easy win. Let's look at a supply example. Here we have aggressive selling. The aggressive movement causes a break of structure, so that's both our steps now complete. We mark a supply zone around the candle right before the move and wait for price to come back to the zone. We enter here, set our stop loss right above the zone, and set our TP at the low of the move. And just like that, we have an easy winning trade. Now it's officially time for the secret tips to improve the strategy even more. Tip number 1. You want price to slowly approach your supply or demand zone. Keyword, slowly. For example, even though you want the price to go up aggressively from your demand zone, you want price to come down slowly to that demand zone when it returns. The slower and the more steady, the stronger the trade is going to be. If price returns to your zone like this in a very aggressive and sharp manner, you wouldn't want to enter this trade. You want price to slowly come down to your zone. Tip 2. You want a fair value gap at the beginning of the move. So remember I told you need to mark your zone off the previous candle before the big aggressive move? You'd ideally want to see fair value gaps within that move. So here you can see price jumped up super fast after this candle and created a fair value gap right here. This is exactly what we want. If this happens, it'll improve the chance of your zones working even more. If something like this happens and price just slowly creeps up after the candle, this would not be good. I mean, the zone still might work, but it has a way higher chance of working if it has a fair value gap like this example. So quick recap of the perfect supply and demand trade. First, you want a strong aggressive move. The move must be aggressive. This is very important. This aggressive move should have caused a break of structure. Price should have also created a fair value gap during this aggressive move. We then want price to slowly come back down to the zone. No sharp movements, just nice and slow. Once it comes back down to the zone, you'd enter here. You'd set your stop loss below this zone and set your take profit at the high of the move. And just like that, you have a perfect trade. If you found this video helpful, leave a like and subscribe to the channel. We'll be posting tons of very useful videos like this in the coming weeks. So make sure you turn on that notification bell as well. I'll see you in the next one.